Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having mounted a modest recovery Wednesday, the Australian dollar is showing signs of a struggle to confirm the recent engulfing Japanese candlestick that was posted Wednesday. Although we have a weak hammer that's in place here, the current pattern is still somewhat negative or lackluster to any support of a bullish case unless we witness a break above 65.65. This in terms would see further strength towards the upside and look towards a potential target around 67 cents. Until we get that break, overall the risk is still very much to the downside and could negate this bullish candle and the hammer that was posted overnight and look back towards the region of 62.45.60. With the dollar index, which measures the greenback strength against a basket of 6 major currencies, slightly weaker overnight and trading around 112 after losing 60 points, has helped the euro rally on and now clearing the region of around 97.30-35 area. The market has found momentum to see a further challenge to 99.45 as a target. Keep an eye on these technicals, they have strengthened somewhat, and if this pattern does continue and the dollar does slip further down to around 111, that will give us another 50 odd points to the upside, or eventually see that challenge around 99.45. The dollar yen still teasing that top side around 145, and along with that, it is expected that any break above there would see another step from the Bank of Japan and intervene to support the current weak yen, and therefore could see a rejection like previously and look back towards the downside anywhere towards the region of 142.60 or down to around 141.05.15. Sterling has found very much strong momentum in terms of the outside range day and a strong candle following, and now claims the region around around 112. Slightly weaker into the Australasian time frame, but nevertheless I still feel there is further upside guidance, and that is towards the region of 112.70 to 113.40. Unless we see a pullback that should find support, that is, if it does continue in current pattern that we're seeing around 109.40.55 as a potential demand zone. Well, it would seem that the engulfing candle got further support to the upside overnight with a dragonfly doji posted, but we didn't see a close above 1,664. Until we get that close, even though we are challenging this region right now, then we could see a slightly weaker play. But a New York close above 64 would give us further indication to 1,686 to 88 as a potential target, which is seen somewhere around this region here. Wrapping up with oil, the market was still somewhat lackluster after the upside attempt didn't take out the challenge of 81.45.70. And from that rejection that we can see from overnight, could see further weakness into today's coming session, or into the European session more to the point, and look back towards 80 or maybe even lower down to 79 to 77. Conversely, if we do see a break above 81.70, then that would put $86 as a potential target, but doesn't appear to be happening as of yet. Well, that wraps it for the week. Thank you very much for joining me, and as always, look after the intraday report. I hope you enjoyed the great start to the long weekend.